The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off 9:06 a.m. We got about 24 minutes to go until the start of trading. Quite an acceleration across the board yesterday. Markets bouncing from the pullback you had on Thursday. Friday, the jobs number. Markets up dramatically yesterday, but on a volume basis. And it doesn't mean you can't trade higher, but boy, it was very pronounced to the downside. And on the S&Ps, folks, yesterday, S&Ps 1.226 million contracts, well off the 2.2, almost half of what we did on Friday. 1.75 is what you did on Thursday. Okay, but you didn't even match Wednesday's action last week, which, yes, that was a Fed day. Okay, and you got some rapid volume you did on Wednesday, coming into the late part of the session. Okay, there's your Wednesday. But I was looking at it this morning, right? And you don't necessarily have to equal what we've done the last couple of days. But yesterday's acceleration, folks, couldn't even match what we did on Wednesday. Okay, very unimpressive volume on the S&Ps as this market. Same thing in the NASDAQ. Okay, yesterday you do 464,000 contracts. You do 800,000 on Friday. You do 730 on Thursday. Wednesday for Fed Day, you did 527. Day before that, you did 530. We did 464 yesterday. Okay, there's less people in the store, and they're raising the prices. Right? Now, you can drift higher on this type of momentum, and there is real earnings on many of these equities, but the valuations, right? You want to talk about valuations, man. We'll talk about it, but Palantir. I was listening to Bloomberg this morning. Now, Palantir is going to pop $12 at the open, folks. Okay, there's your acceleration on their earnings. You're up to 172. You were at 160 yesterday. You beat across the board. You jump over the Analyze tab. We're now talking about a company that's valued at $400 billion, and they have annual sales of $4 billion. They're trading at 100 times not earnings. That's not a PE. That's a price to sales ratio of 100. Whew. Now, that company's got a lot of future, folks, okay? But they have sales of $4 billion, and to buy that company, it's going to cost you $400 billion. You got to take a lot of money to the bottom line and grow a lot. And boy, I bet that's where that company's going, valuation-wise, okay? They may be growing into the poster boy of valuations. And you're talking about a run on Palantir. And yeah, they're firing all cylinders. But on a 2.5-year basis, you've now gone to 175 from $5. Even if you take it back to the beginning of 2024, from $15, you're talking about more than a 10-bagger. And even when you look at, okay, Microsoft and Meta, who are both up this morning, you have some decent action. Even Amazon, that's been struggling, is up this morning to kick things off, okay? You jump over to Microsoft, gangbuster earnings last week, and you're marginally higher. And I say that as in they beat across the board. This is a valuation issue. Okay, if anything, Amazon, which have been the longest bull, but yeah, the spikes are up on Amazon. As this market giving it up a little bit this morning, we were higher. But that is Azure growth. And Amazon's got a lot going more than just Azure, just as Microsoft does, though, in the same vein. But they are just lacking in dramatic fashion, okay? But point being, this market should have pushed higher, especially for Microsoft. You know, Meta's carrying those gains, okay? But Microsoft compared to Amazon, man, gangbuster numbers. But guess what? Those gangbuster numbers are priced into an equity that went from 344 to 555, right? You're talking about an equity that just traded up $200. I'm pulling up the outstanding shares, and you have 7.5 billion shares outstanding. So this equity just added $1.6 trillion, okay, because you're up a little bit more than 200, $1.6 trillion in market cap in 4 months. You better be putting up numbers like that. Okay, and that's even from the beginning of the year, folks. You're up $130, right? So that's $1 trillion from where you kicked off the year. Take out the tariff volatility. Okay, go back to prior to the election, you were at 435. So paying attention to the price and volume, thinking about how to kick off the program. And I know you can only say it so many times, and we talked about this area back on the NASDAQ 100, and maybe that's the area that you're coming back, folks. That's now 2,000 points below where we're at. And I'm just talking about being prepared for consolidation, a reasonable pullback in this market. We've traded higher on very thin volume. Okay, this volume, look at this volume on this NASDAQ. Compare it to the February volume. Nobody was even paying attention to the hysteria in the market that was about to break out, right? The volume was there, but the headlines were not in this market yet. Look at the volume we've drifted higher on compared to anything we were getting in February. In March, I'm not even cherry picking April, okay? And where does the selling come from? Right there. All right, the selling is coming from the underlyings of this economy. The economic data is going to become very, very important, and it's not because the market is hopeful that we're going to grow further by cuts. We're now at the stage that the market's very worried that, of course, Chairman Powell's late. The economy has weakened dramatically, more so than we thought before the revisions, of course. And the market's really worried that they're late to the party, and we got some weakness, and we got lag in the numbers, and the weakness has come over the last 3 months. Companies aren't adding jobs, the consumer's suffering, and the economy's weakened. And that is going to show up in the data if that's the case, folks. All right, we take a look at yields this morning. Now, the market got quite a pop yesterday, as you got quite a reprieve, right? Friday, huge acceleration to negative prices yesterday. Huge acceleration on Friday, excuse me. But yields have done nothing. So somehow the market came to terms with, yes, the Fed needs to cut dramatically, and that's because we have a dramatic amount of weakness in the economy. And then Monday, somehow, the market was like, no, we're going to power higher by earnings, but the Fed's still going to have to cut, and we're going to price in a whole cut immediately. And those two don't quite gel. And the bond market is so much bigger than the equity market, right? And so if the bond market's saying, hey, writing's on the wall, economy's weakened, Fed's hand is forced, well, equities pay attention to that, and that would be my warning. Heed the warning. Doesn't mean it has to play out. There's no certainties in this, okay? But I put things in buckets of probabilities, right? And there's a decent probability right now that this economy is dramatically weakened. Stocks are priced for more optimism that's there. The fixed income market is saying the Fed is cutting. I'm like 92% odds. We'll pull up the CME Fed Watch later in the program. We're getting a cut in September. Now, I say that. We see how quickly things can change since Friday, right? Every data point. What if we get revisions on the other way? These yields, okay, if you've been watching yields on a 30-day, 60-day, 90-day basis, the market probabilities of hikes, of cuts, all you have to do is take a look at the swings on the 10-year, okay? You go back a year, you come back even further than that, right? September, we had dramatically lower yields. The election, yields spiking almost 5%. Okay, so we're going to get more data before that September meeting as well. But right now, yields are saying market's in trouble. S&P is a positive by 4. We got a lot of equities to take a look at. Stay tuned, folks. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. You had President Trump on CNBC at 8 a.m. this morning. I was in the Tiger's Den, putting that out there early this morning, right in the newsletter. And yeah, so talking about a wide-ranging subjects, no real news, as in market-moving breaking, but you look at the horizon and volatility, and not surprising, but President Trump says pharma and chips tariffs coming in the next week or so, not 2 weeks, next week or so. And you look at the numbers, man. We'll be putting an initially small tariff on pharmaceuticals, but in 1 year, 1.5 years maximum, it's going to be 150%, then it's going to be 250%. They want pharmaceuticals made in the country. We're going to be announcing semiconductors and chips, which is a separate category. And yeah, Merck, Lilly, you better believe they're all over the globe. And then you talk about the chips. In terms of the big tech companies, they're going to be trying to make those chips in the U.S., man, because if you're paying those types of tariffs, well, those chips are getting made elsewhere right now. Check out Amazon shares in the overnight. Now, let's take a look at the volume on Amazon, all right? This is worrisome, folks, okay? I love Amazon, but fundamentally, really keep your eye on what's going on in this equity right now, okay? We're trading into this bar from, we're not trading into it, but this is the bar that I'm looking on the horizon, okay? We got a real spike here just over a year ago, June 2024. We also had a spike in October of 2024. Both of those have highs at 200, okay? 200 was the high there. That's where we gapped above in May. And you're also talking about coming in to test the highs of the lows. Okay, this is an area around 200 I think Amazon's coming for. And on a daily basis, there was a rotation out of Amazon yesterday. Okay, Amazon was catching no bids as the other tech companies catching bids. For those that had centered bets that were probably too concentrated in Amazon, you had that diversification because on a day like yesterday, all right, you pull up Amazon, you open near 218, you rip lower to 211. You compare that to some of their competitors, okay? The exact opposite. Right? And that was digesting after we already knew the numbers of Amazon, of the jobs. That was just Thursday and Friday data getting recalculated by big players out there and saying, you know what, man? Yeah, Apple not as bad, but they didn't hold on to the gains out there. But you look at some of the other players in cloud, right? OCI, Oracle, from 246 at the beginning of the day to 254. Okay, so if you think about if you're in that cloud sector, right, if you have exposure to Amazon, if you think that that's the future that you want to be all in on, there was a lightning away from Amazon, which is problematic. Okay, and if that doesn't correct, you're going to see that continue to take place. Amazon will be okay, but in the short term, man, that's a problem. And yesterday's action is a problem as well. There was no reversal. This market reversed dramatically. Amazon was not a participant in that in any way. So just as the market now thinks that we're rolling over possibly on a jobs front, on an economy basis, okay, the data is going to become very important. Like the next jobs number, the unfortunate part about it is that now the conversation is going to revolve around whether the numbers are manipulated, which they're not. But the next jobs number is going to be of the utmost importance because it's either going to now be a confirmation that the Fed was probably late, the economy has weakened dramatically over the last 3 to 4 months, or you're going to get another reprieve. So often the moment we're on the verge of one, there's some data in there for everybody, but we're at a real cliff right now because 33,000 jobs being added on a 3-month basis, you better believe that's problematic. And we don't have a Fed meeting until almost 6 weeks from right now. Okay? So that's the worry right now. That was the worry in equities. That's the worry in yields right now, right? The Fed can always come in with an emergency cut, but boy, if the Fed ever comes in with an emergency cut, say goodbye to equities, folks, okay? And it's very unfortunate that they have 6 weeks out. They're in that period that they have 2 months of data in between meetings, okay? And, realistically, there should be nuance in terms of navigating their meeting schedule, right? Maybe they should have went 7 weeks out from their last meeting, so they could have pushed that July 31st meeting to today, August 5th, and then shorten it up for 5 weeks. No, they go 6 weeks every time, and by going a month and a half every time, sometimes they get 1 month of data in between meetings, and sometimes they get 2 months of data in between meetings. That's an unfortunate setup if you happen to be right on the verge of missing the turn with the data, and that's the worry in this market right now. Okay? And the volume is a little worried on top of it. Jump back to those yields. Slight pullback, down by 5 ticks to a slight higher yield, probably flirting with about 4.21, 4.22 maybe. We were at 4.21 as of this morning when I was writing the newsletter. You jump over the dollar right now, right at 99, at 98.911, and you jump back to gold. Gold, basically chopping around, but gold is going to need more volume to break these highs. So check this out, folks. Okay? The volume we have in gold at the highs on multiple occasions, it's going to take a monumental number to get above these numbers, okay? Last week, yeah, we had big numbers in the gold contract last week on a volume basis, okay? But we didn't get above the highs of the week prior, and you definitely didn't get above the highs of June 16th, and then you have this high of April 21st hanging out there, okay? And that is a big one of almost 1.5 million contracts. Now, you take a look at the daily on a shorter term basis, right? Look at that sell-off we got back in April. Tremendous selling at the top there. No really selling on this number, but check out June 13th, folks. Okay, that was the acceleration to higher prices on 264,000 contracts. You couldn't even get 222,000 contracts on Friday, and Friday was a monumental day. So watch those two, because that's really the one that stuck out, right? Your acceleration to test the highs in the middle of June. On a daily, you had 264,000 contracts. Friday was a spectacular day, folks. Okay? It's not often that you get a revision like that. The BLS chief is getting fired. Jobs are falling through the floor. The president's saying it's fixed. The market is saying, oh man, the Fed is really late. The economy is falling apart. Gold accelerates higher, right? By almost $80. This bar is from $33.31 to $34.16. And folks, I want to be a huge gold bull, okay? Right in the gold report, I would love to say, hey folks, I think the gold's going to 4,500 in the next 3 months, so get in. But right now with this volume, man, it is going to take a tremendous amount of volume to break above these highs. Even if we get a little bit of resistance right now to the upside for the dollar. You get the dollar at 99, yields at 4.2%, and you're still struggling on volume on gold. We're coming back for the open. S&P's up by 4. Don't go away, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets open. You have an S&P up by 7 points right now. We have NVIDIA shares slightly in the red. Take a look at NVIDIA. And yeah, maybe a little bit dip lower. When you're talking about those comments from the president this morning, we just dropped, what, $3 on NVIDIA? That's $75 billion in market cap. Well, quite the numbers, man. And yeah, when you talk about those numbers, man, yeah, you better believe that it may come into those chip companies. Now, how about Taiwan Semiconductor, man? Potential trade secret leaks. 6 people arrested. I saw on a different one out here. But yeah, they have trade secret leaks. And Taiwan Semi down by about 1%. Market's drifting a little bit lower right now. Let's check out the big players. Amazon shares up by 0.6% right now. Microsoft shares trading up by 0.1%. We give it up slightly on the open. Meta shares dipped slightly in the red this morning. All right, Google slightly in the green, up by about 0.4% right now. Let's take a look at Netflix. Yeah, we got a little pullback on volume going on. Check out the last 3 weeks on Netflix, right? Not even the highs. I think we're coming back to test this high volume bar April 21st at about 1100. We're trading right now down by about 0.2% on Netflix. We're checking on Palantir on their numbers. Hour and higher. Well, the thing I'll say, folks, right? I don't have to pull it up. Just look at this volume, though. That can't go on forever. Right? Now, you'll probably get some decent volume this week. It's only Tuesday. We've already done almost 100 million shares of Palantir. You only did 300 million all last week. Today's going to be an epic day, I'm sure, up by 8.4%. And maybe that's the acceleration on volume you need to get a new base of 160 on this equity. As I mentioned, they're a $400 billion company, and they're doing $4 billion in sales. So yeah, let's take a look at it. So revenue's growing 48% during the period and hit $1 billion for the first time for the quarter. $1 billion versus $940 million expected. And yeah, how about working for this company, right? Check this out. And there's no shame in the game, man. But how about working for a company like this that says that we're gonna 10 times our revenue, and we're gonna lay off 14% of our staff in the meantime. Kudos. Well, that's the age we're in right now. And that's what they want to do. Grow our revenue and let people go in the process. Crazy efficient revolution. 10 times revenue and decrease your employees in the meantime. For the third quarter, they're looking at revenue of $1.08 billion. U.S. revenue, a huge chunk of that, jumping nearly 68% to $733 million. Now, I will say, folks, they've seen a boost from President Trump's government efficiency. U.S. government revenue jumped 53% from a year ago period to $426 million. This growth that they're experiencing is rapid. And you always want to look at trends of growth. And this pocket going from Democrats with Biden and Trump and Republicans and Palantir might be an area that they're experiencing a period of growth right now, this year, next year, right, even on the short term, to rationalize up to a $400 billion market cap is quite the next step. Net income, $326 million, up from $134 million, quite a number. Yeah, one of the top 20 most valuable companies, and that's great, but now they have to grow into that valuation, okay? They're doing $1 billion in sales and they're a top 20 company. And they just secured a $10 billion software and data contract with the Army. And they traded 276 times forward earnings. Tesla's the only other top 20 company, and they're at 177. So if you're buying value and you're buying Tesla at 177, you're buying value, right? If you're buying Tesla at a forward earnings of 177, you're buying more value than you are Palantir at 276. You got to know those numbers if you're getting into those equities, folks. Doesn't mean they can't trade higher, but my goodness. Now check out the volume, though, okay? And that's what to keep your eyes on. Because, yes, you can, but boy, not if the volume keeps trading lower as they inch higher. All right, some of the other headlines we have pulled up here. Yeah, speaking of Tesla, right? Quite the multiple, 177. Sales in Britain and Germany fall by more than 55%. Yeah. I mean, Tesla is almost, and it's not a meme stock in the same degree, folks, but you better believe they're bringing back the CEO, because it is a stock sold on a story that is sold by the investor, fortitude of what Elon is going to do in the future, not based off numbers to do anything with what he's doing right now. Tesla sales in Germany, 1,100 units, down 55%. All right, we jump around. What else? Yeah, this one's an interesting one out here from the Journal. This one was out yesterday. I was reading it last night. So Tractor Supply beefs up last mile delivery to grow sales. Serving rural areas, plans to handle more deliveries itself in a bid to increase sales. I can only imagine when you're delivering that type of stuff, folks. I got a small TV, relatively small TV delivered recently. And what's remarkable is, so check this out. Darth, you out there, man? Talking a little bit of Sam's, talking a little bit of Walmart. So good old Walmart, up by 0.6% today. You're coming up to the highs of about $100 yet again. And the amazing part here is, so I'm a Walmart Plus subscriber, however that works, right? Member, something like that. And the TV was just large enough that I was like, man, am I really going to be able to put this in my car very easily, right? And they had the ability to deliver your television, okay? I think it's a 58-inch TV for like $200 from Walmart. 4K, 58-inch Hisense TV, 4K for about $200. I think it was $212. And check this out. To deliver it within an hour was $6. To deliver it within 3 hours was $3. Now you didn't have to. You were inclined to tip the driver, which I did, of course, and you should do as well. Okay, in that instance, I was like, this is remarkable. Last delivery. I was always talking about in the days past, though, folks, beginning of the pandemic, how Walmart and Sam's could not keep up with Amazon. But boy, I cannot order an Amazon TV delivered within an hour or 3 hours for $3. Can't do it. Big numbers, that is. So we'll talk about Tractor Supply when we get back as well. TSCO up 0.6%, trading higher yesterday. We're coming back, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have markets higher across the board. S&P's up by 9, NASDAQ 100 up by 55. And yeah, so checking out Tractor Supply. Quite an acceleration from the lows of June, from 47 up to 64. But earnings, back it up a little bit further. Earnings coming out a couple weeks ago now, July 24th. And yeah, we're trading right into that bar. But when you look at the battle for the last mile. Now, what I found so interesting, and it would make sense, right? You're talking about they're doing goods, they're selling goods. When you're talking about 50-pound bags of seed, right? 50-pound bags, what are they having here? All that heavy equipment, etc. But guess what? In the markets where they offer final mile fulfillment, the average order is almost $400, and they get better satisfaction scores, higher repeat orders, and lower return rates. One-third of customers surveyed by the company said they live off gravel and dirt roads. Imagine this. One-third of Tractor Supply customers live off gravel or dirt roads, and 7 out of 10 cannot accommodate a simple truck due to trees or turnarounds. And so they're going to be the ones that are going to get it done and deliver. Talk about an endeavor. Now, they've grown their sales rapidly, but it seems like they might be topping out a little, because check this part of it, right? What do I always say? Percentages on small numbers can be deceiving, okay? They had an investor day last December, talking about almost 9 months ago now. They had grown digital sales more than 340% over the previous 4 years to more than $1 billion. Well, if you're up 340% to $1 billion, you were starting at a very low number, right? What, 300 million? Nah, 250 million. Yeah, even lower. They make up 8% of the entire company's sales right now. And their goal is for it to grow its digital business to 10 to 12% of sales in the next 3 to 4 years. That doesn't seem like a big number at all, right? You're at 8% right now. All they want to do is get to 10 to 12%. They were growing at 340% digital sales. They are nowhere near that digital sales growth anymore. If they're only looking to go from 8% to maybe even 10% at the lower part of their range 4 years from right now. And then we take a look a little bit longer term. And yeah, you're coming up to the highs of last year, okay? We came up to those highs September of 2024, September 30th. You challenged it again on light volume of 21 million shares in October of 2024. And since then, you can't get above $60. We're coming into that area right now. But look at the volume we did the last 2 weeks. Big spike on July 21st. Oh boy, we're coming into this extreme week of volume on their earnings. And that's going to be a tough one to get above with volume. It's been a heck of a run for this company. From $10 in 2017 to 60. I mean, look at this monthly on Tractor Supply. You couldn't close above this, right? Would have been a beautiful chart if you could have closed above, even close above the bodies of these candles, somewhere above 58. You couldn't do it last month. And now we'll see if we get volume, and that will be very difficult to get volume. So you got above it. You wanted it to close above there with volume. Couldn't get it to close. You give it up. And Tractor Supply. Hey, strong looking equity, but that case not quite lining up to the bullish side. Look at Palantir by 9.3%. Oh, there you go on Amazon. All right. Amazon's up by 1.9%. That's what you want to see. Yesterday was worrisome, man. That candle yesterday, for yesterday's candle to engulf the entire body of Friday, that was a statement, man. We'll see if we can do the opposite today. Apple shares slightly in the green. Microsoft flat right now. Meta up by 0.2%. Nvidia shares slightly in the red. Chip stocks a little bit under pressure. Tariffs looming. Nvidia down by 0.3%. TSM down by 1.1% right now. Jump around to AMD slightly in the green. There you go. Intel catching a bit, up by almost 4%. Check out some of the banks with yields pulling back a bit. JP Morgan down by 0.3% right now. Just chopping around right near the highs of $300. Bank of America slightly in the red as well. All right, let's check out the airlines this morning. Yeah, no huge action just yet. You get Delta up by 0.2% right now. United slightly in the green. JetBlue's just struggling. I mean, you're looking to get action on JetBlue, folks. You can look to get a buy at that $4 area where you caught a slight sign of strength on June 23rd. Well, look how you gave it up on their earnings, right? And if you're getting into equities like this, keep in mind there's a probability that it can go to zero. I talked about earlier that I think of things in buckets of probabilities, right? In many equities, there's not really a likelihood that it goes to zero, at least before you have the possibility to get out. In an equity like JetBlue that's dealing with what they're dealing with, bankruptcy, there is a real distinct probability when you get into equities trade like this, okay? Even some of the smaller penny stocks, okay? Even some of the smaller penny gold stocks, etc. There's a probability when you're getting in those equities, you wake up overnight and they're going BK. JetBlue in particular. We go big picture on a monthly. I mean, yeah, you can make the case that we're bottoming out at mere almost pennies on the dollar where you were trading at some of the highs as recently as May of 2021. And look at those technicals sometimes, folks, right? If you're in JetBlue, okay, you survived the pandemic pullback. You had a high prior to that of 2165. You got up to 2173 and 2196. You always want to have your spikes up in this type of an equity, in that type of a formation when you're coming into a simple high. Hindsight, of course, I know 2020, but also not a coincidence. Getting it all back at $20, and here we are, 5 years later, sitting at $4 and change, flirting with bankruptcy. See how we're kicking the session off on the S&Ps. Yeah, no huge volume spikes. I mean, check it out. This is, the first opening bar. Doesn't really compare to prior days, right? That 930 bar, you just did 73,000 contracts. Prior days, you're doing 110. Yeah, 156. That's one of the lowest volume days going back to last Wednesday. So probably not going to see the fireworks of last Thursday, Friday, Monday as well. S&P is up by 9. Stay tuned, folks. We'll come back. We'll take a look at some more equities. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have Disney right now. Negative 65 cents. And yeah, let's take a look at this. We got a question about Disney and the YouTube Tigers Den. So just like I was talking about sometimes technically, not a coincidence, right? We're hitting this high of 2024. You hit a high in 2024, 123.74 within $1, 124.69. We've backed off a bit. You did have a little bit of selling last week. Okay, and that volume acceleration from May 5th, things have trailed off a bit. So you might just be in a little bit of a pullback. Now, what's remarkable about this consolidation, okay? You're looking at this chart on Tiger TV. You're going back a couple years. Let's pull it back 5 years. You say, okay, this is a consolidation we're dealing with. We've been there since May of 2022. It's a pretty well-defined area. We're bumping up against resistance to the upside right now, okay? You know what's wild about this, though? This area not only correlates to where we were in 2022 when you broke lower. That's where you chopped around from 2015 to 2019. Okay, and that acceleration in 2019, in April of 2019, folks, okay, was the release not of Disney Plus. Can't believe that that's going back. My goodness, 2019. Man, you're telling me that 6+ years ago? 6+ years ago. Do you remember that, folks? Were you around? Were you watching it? Were you in the market when Disney came out with that they were going to undercut Netflix? I think at the time their basic plan was going to be like, what, $3.99 or $4.99? And the market was like, this is the greatest thing I've ever seen. They're going to uncut. They're going to get million. And they did. And you accelerated. They launched it later that year. Perfect timing prior to the pandemic. But check out that area, right? So you're talking about all of this from August of 2015, trading lower on that level. So on a short-term basis, there's a little bit of pressure to the downside right now. Okay, on a longer-term basis, I think this is a nice area. Disney is poised to break out. You're going to pull back, watch that area of about 120 on Disney. But yeah, longer term and over the next couple years, they have a great lineup of movies coming out. You're talking about a couple Star Wars flicks. You're talking about an Avatar flick. All right, folks, stay tuned. You got Basil Chapman. He's coming up next with the Tiger Technicians Hour. Have a great Tuesday, folks, and I'll see you this afternoon at 3 o'clock. Have a great one, everybody.